welcome to another edition of BCR Webcasting. Today I'm delighted and honoured to be in the presence of Professor Michael Mainelli. Professor Mainelli is chairman of the ZN Group and is also, chairman of the ZN Group, I should say, and president of the London Chamber of Commerce, and is formerly the Lord Mayor of London. That was between 2023 and 2024. So Michael, you've allowed me to call you Michael. Welcome, and we're delighted to have you here. And you're going to be speaking at our Alternative and Receivables Finance Forum, which will take place next week, and that's the 26th of November, at the offices of Clifford Chance in London. And you're going to be talking about the SME finance climate and about closing this famous funding gap that everyone's been talking about for so long, and the role that alternative finance might be able to play in doing that. So, Michael, I'd like to ask you to start with, why have banks largely withdrawn from funding SMEs in recent years? We've certainly noticed that in the UK and probably beyond the UK as well. Generally speaking, we've seen a trend towards the funding of larger businesses with receivables and payables finance. That trend seems to have been running for some years now. So what's your view on it? Why does it appear that banks have withdrawn largely from funding SMEs?
Well, the history of banks in terms of funding SMEs is a complex one, and it is actually, honestly speaking, as a researcher, very difficult to analyze. And many notions are put forward on how to get more lending into businesses. Theory says that, frankly, if you've got a good business, the money should find you, and you should generate a decent return. And yet, there's this feeling in many countries, not all, I'll come to that in a moment, that the banks are failing to fund particularly SMEs. One could ascribe quite a bit of this, I think, to two factors. The first is the scale of banking concentration, which is often overlooked. And the second is the regulatory system, which is frequently blamed. So let's look at the one that's often overlooked. Competition in a number of countries does mean that SME lending in many nations isn't perceived as so nefarious as it is here in the United Kingdom. I would point you, for example, to Germany or to the United States, where SME funding is not seen to be a particular problem the way that it is talked about here in London and beyond. And the numbers are compelling. Germany has about 1,800 banks. The United States has about, I think, just under 5,000 banks. So there's quite a bit of competition to provide that lending. And a lot of it is done on a local basis. Now, this is changing. We'll come on to that in a minute. But it is the case that in a lot of these places, you can go to a local lender who really knows the local community and get a loan. And what are the numbers in the United Kingdom? Well, intense concentration. I believe the top four have got about 65% of the SME market. And recall as well that at one point, 50%, 52%, I think strictly, in 2009 was bust in the form of RBS and now, and Lloyd's. And further, of course, Barclays was hardly healthy. So you have a nation that is, when you talk about bank lending, tremendous. You might as well name the banks. There's no point in talking about British banks. There are about 100 British banks that can take deposits, and I think something like 40 of those are actually building societies, which are subsidiaries of the Nationwide. So there's not a rich lending market in the first place. Then we turn to the regulatory aspects. In this case, of course, regulators, for very good reason, would like to see lending quite backed up. And the perception is that lending against future cash flow is not a good thing. That's for the equity markets, and that the bank lending market should be very much focused on debt secured in some fashion. And of course, the security of tradition and the security most favored by regulators tends to be property. And so we've seen again this sort of concentration on the property element of the SMEs. And in fact, if you've ever been advising an SME in difficulty, you will go to a bank who will tell you that what is needed, particularly at the smaller end, is a personal guarantee. And what is the personal guarantee? Well, the personal guarantee is your home. In other words, it's really just a mortgage. In some cases, you might as well mortgage your house as an owner of a small business and lend that money to the business, for all it's worth to talk about supposedly a bank loan. So we've got these two issues here constraining the bank's abilities, but in truth, the banks, particularly in a concentrated market, have little particular interest in SME lending because they're not.
Do you think we're over-regulated here in Europe and the UK, as is often said, compared to the US? And is that part of the problem?
Well, I think it's important to distinguish what you mean by regulations. So, we did, let's be honest, we had an awful crash. But again, this crash is often poorly analyzed, particularly in the United Kingdom, because we had, as I said earlier, we had this intense concentration, and Gordon Brown and Alistair Darling blamed it on the international markets, but the leverage ratios here in Britain in 2009 amongst those top three banks were 42 to 1 against an historic average of typically about 10 to 12 to 1. I think they're now down to about 15 or 16. But the point is that had grown completely out of proportion. And there were two other countries where that happened, and that was Iceland and Ireland. Iceland, where three banks had the entirety of the market, small market, 350,000 people, and Ireland with about 4.5 million people. But again, two banks controlling most of that. So concentration and high leverage ratios are really what led to the problem. So are we overregulated? Well, in the United States, remember that they had about 150 banks going bust every year up until 2009. And in 2009, it was 300. But at the time in 2009, there were 8,000 banks. So you can afford to, in fact, you want to lose 150 a year because they were creating 150 a year. That's a vibrant banking system. Whereas we've been unable to get our challenger banks up and running in any way. Is this due to regulation? Good question. It is certainly the case that prior to 2009, the United States was much better at creating new banks than we were here in the United Kingdom. In the European sense, it's a rich mixture there, and I don't think you can just lump Europe into one clump. You've got the French Caixa, as a Spanish Caixa, you've got the French banks, you've got, as I said earlier, 1,800 German banks. So it's a much richer mixer than people I think give it credit for. Could we do more on the regulatory front? Yes, most definitely. And it would probably be permitting the banks really to lend against future cash flow expectations. I know that NatWest has brought out a product about 1.5 years ago, which is called an intellectual property product, but in a sense they're trying to provide unsecured lending, unsecured against property, that is. And I think this is really the way to go if we believe that banks are the mechanism to do that. Your conference is talking about alternative finance in the round, and there are many other ways of achieving the funding of SMEs.
So, well, let's look at the what's happening in the alternative providers, and maybe the challenger banks as well, and the fintechs. I mean, to what extent do you think they can help in this situation and provide the funding to SMEs that the banks seem to have pulled away from?
Yeah. Well, there's a handful of challenger banks that got set up about 10 years ago that are still running and are providing very good levels of service to SMEs. But again, they are providing a product which would be recognizable by the big four anyway. It's the same sort of lending against property for the most part, or equipment and machinery, basically physical assets that are there. They do a good job. They're not growing that rapidly if you do look at them with a critical eye. There was a report in the FT a while back from memory. It said something like within 75 years, they might have 10% of the market, so something along those lines. The point being that it's very, very hard to grow when you're completely constrained to a regulatory system that's identical to your much, much larger competitor, and a regulator who is quite naturally very sensitive to the potential dangers of a small financial firm. So they're growing, but they're offering effectively the same product, just with better levels of service and a little bit more patience and understanding than elsewhere. So I wish them well, but that's not alternative finance. That's fairly traditional.
Mm. But they're not constrained to the same extent, though, are they? Regulatory constrained as the banks.
They are once they get to a particular size, they're constrained in very much the same way. The biggest thing that constrains them isn't the clients that they take on. I think it's really the ratios that they need to keep on the balance sheet and how the balance sheet is structured, and it's structured in the same way as the larger banks.
Yeah. So Michael, are you essentially saying that the future is not that bright, really, for the support for SMEs moving forward?
If you're depending on banks. So there are
Right.
many other mechanisms that you could choose. So you've got the kind of the wilds of crypto or alternative finance on that. There are, in fact, models that we sort of stubbornly ignore here in the United Kingdom. The covered bond market is a good one, which functions in many areas of the continent. We also have the very famous example now running at, I think, 90 years old, which is the Swiss veer, which nobody here ever seems to talk about when they want to look at it. It's about 2.5% of Swiss GDP. So there are models out there that work, and they are not banking models.
Yeah. So a bit of a change of mindset is required, perhaps.
Yeah. And when you get into areas like receivables, which is what the function of your one of the focus points of your conference next week. We've struggled with that market for ages, and they're really, and we've also, of course, had these immense difficulties in the United States. The problems with receivables being, unlike physical assets, to a greater degree, it's difficult to prevent people from allocating them to several different lenders. And it's that ability to lock them down. So things we could do in the United Kingdom, which wouldn't be particularly difficult, would be some type of really a registry. Just as we register mortgages, we could register receivables forthcoming and things like that. But it requires a good national discussion, which is why I support what you're trying to do. Yeah. Another area that we have again seen troubles in repeatedly have been what used to be called capacity markets or barter exchanges. Again, SMEs trying to find ways to sell forward things, particularly perishables like hotel rooms and food and meals of various forms. Again, people take on these barter exchanges, put them on at full rates, and we've seen a number of scandals in that sector. But just because we've seen scandals there or in crypto or wherever, doesn't mean that we shouldn't be exploring them.
Sure. Yeah, and registries, as you mentioned, we have seen that used successfully in some markets, like in Turkey, for example, where they have a central registry for receivables, and that seems to have brought down fraud almost to zero from a very high level before they had the registry.
Well, one of the interesting things that I don't think people, again, who don't work abroad see, I think it started in Russia or Italy, or both of them now have invoicing going through the tax authorities. So now this has been talked about here in Britain, and I know it's on HMRC's radar. And I know that most small business people go, oh my gosh, the last thing I want to do is have HMRC closer to things in some sense. But these, I think they're now operating in well over 40 countries, this concept of taxing through the tax authority. Sorry, invoicing through the tax authority. And of course, that means you immediately got to register if HMRC wishes to see that. But these are hopefully discussions that we could promote to help bring forward the receivables market.
Yeah.
The final thing I might point out is something that's always perplexed me. I've been advising SMEs in the United Kingdom professionally since the 80s. And one of the stranger things for me has been why some bank just doesn't lend against an option on equity. Most SMEs really do not want to give any equity away. They'll fight tooth and nail.
Mm.
So we've got a cutoff point that says something like if you've got more than, I don't know, 1 or 2 million in revenues, and you've had that for more than 5 years, and you've been profitable for 3 of the last 5 years, we will lend against a proportion of your future revenues. Because most SMEs would fight, as I said, notoriously keep that from getting into other hands.
Yeah.
But if it did fall into other hands, then one of the things that the lender would have recourse to is to actually buy and own the business outright.
Mm.
So kit and equipment in there, this doesn't go through the receiver loop, which is another weakness in our system,
Mm.
is the way in which administration receiverships are handled. Very little actually goes to the creditors proportionately. I know that's somewhat offensive to people in the sector, but it's true. They're managing it professionally, but a thriving economy knows how to recycle its waste, knows how to recycle its debt. And that's another area that we could do in Britain to free things up and smooth the process, somewhat tangential to the alternative finance. But it is an area where a lot of finance is locked up unnecessarily for periods of time when it could be released.
Yeah. Michael, some fascinating ideas and thoughts coming out from you, and I think this will be a very interesting presentation next week. So we'll be looking forward to hearing more from you. But from this little snippet today, from what I grasped, you've certainly got some interesting ideas, which I don't think a lot of the audience will have thought about or maybe even heard about previously. So we'll be looking forward to that very much. But thank you for today, and we'll look forward to seeing you next week. And just to remind everybody, Michael will be speaking at our Alternative and Receivables Finance Forum, which will be taking place next Wednesday. That's the 26th of November at the offices of Clifford Chance in London. Michael, thank you again very much for your time today.
Thank you, Michael.